So today I want to show you how to manage this poor man's covered call in here. It's made up of a long and a short call, and you can see that Tesla's price, given the last kind of decline recently, the long call is in a negative position, the short call is in a positive position. So we want to capitalize on this profit right here and maintain this long call and give it more time to operate. We have 15 days till expiration on the short call, and it's already at 97% profit. So we're going to close that down and book that profit and look to sell another call option at another technical level that hopefully won't get touched in terms of the next kind of 15 to 30 days. We're just rotating some capital here and lowering our cost basis. So if I close this one out, I'm going to click on here. I'm going to show you in a spreadsheet in a second how to do this as well. I'm going to go right here to close, and it's going to let me buy back this trade to close. I'm going to just go limit order, mid, day one, good, and submit this. And I'm just going to update this to go to the ask so that goes through. An extra dollar is not going to be a huge deal for me. So now I'm left with this call option right here at 130 negative 2,600 bucks. Okay. I'm going to trade in the hopper now that we had a realized price of 446.90. Let's put that into our trading calculation right here. So we got a profit of what did we say there? 446.90. 446.90. Okay. Which means that we sold that one to close, bought it back. Current price of Tesla's at 188. It's dropped. So now we want to go ahead and then sell another call to open again and potentially get paid a little bit more cash here on the same trading day, February 1st. Sell call to open. We're probably going to lower our technical level for the price, given that the price has dropped significantly to this value right here. And so what we want to do then is just go and see what we can get in terms of a strike price and what we can go to kind of, this is our bank profit right now. Make this green like that. We are sitting on a loss right now. Like I said, we're kind of in the range of negative 2,600 bucks. So let's put that in there as well. Before we do this, negative 2,645. Okay, that's our overall kind of loss right now on the trade, but we haven't locked this in. We haven't capitalized. This is non-realized or unrealized. Unrealized. This is realized. Okay, so we've got that in our account now. That's profit. So let's go sell another call option on Tesla, kind of get more profit, hopefully to realize in the short term. And hopefully as well, the price of Tesla will appreciate and this can kind of get managed. And then this will hopefully become a little bit less as we move forward in time. So technically speaking, we want to have a call option that's not going to be threatened by the price of Tesla appreciating. We've got this long kind of drop after earnings, then some indecision on this candle, a little bit of a bounce higher with a pretty strong candle right there. Then some more indecision right here, indecision there as well. You may want to wait an extra day to go ahead and do this just to understand where this stock may go next. But this next candle, normally when you see a couple indecision candles back to back like that, or a few, there's a little bit of kind of a fight going on between the buyers and sellers, and they're not sure where the stock's going to go. These long wicks really tell the story about that. Just that people are fighting. We don't know if it's going up or down. So maybe we'll just go ahead here and look to sell a technical level, maybe up here at the 220. We'll look at the chart as well, but there's some wicks there. We go back. This level up here could look at support. 200 seems to be, 205 is the kind of the area that I'm targeting. So we'll go just above that, maybe the 210 area-ish around there. So hopping into Interactive Brokers to do that, what we're going to do is go out roughly a month there, March 15th. Okay, 43 days, let's say. We can also put the weeklies on. We're doing just the monthlies there. So we put the weeklies on, we can go back in time a little bit more. Obviously, the volume's not going to be as great on the kind of off weeks when there's no weekly or tri-weekly expiration. But let's go 36. Let's look at March 1st. Let's say 29 days away. We want to sell this call option. And I want to target a delta of around 25. If I want to get a pretty good bang for my buck, 205 is our level right there, 210. We said, if I go back up to 210, there's a nice delta there. So I'm going to sell this option right there, the 210 call. I'm going to put this in the hopper and we're going to go mid, quantity of 1, and we're going to go submit. Anyway, it'll fill. It'll fill and we'll put it in our hopper, but we're going to go ahead and then trade in here and say, hey, we just sold another one here. We're going to go 211. And potentially after another 30 days, right? If this price doesn't get approached by Tesla, that's another 30 kind of point jump that has to go up there. We'll be able to kind of bank another 200-ish dollars. And even though we're down on our position right now, we're down 26.45. If you bring up the calculator, right? We're not actually down 26.35. We're down 26.35 minus the, or 26.45 minus the 446.90 that we just got. So we're only down 2,100 bucks. And if we get another 200 bucks in the bank after another 30 days, we go 200 again. We're just lowering our overall kind of unrealized loss potentially. So we're giving ourselves more time for the trade to work out and not eating a whole bunch of this unrealized kind of area. If the trade does continue to kind of spiral downwards, however, and Tesla's price does keep moving downwards like this, that's obviously not good for our long position. We'll keep making money in the short term with the short calls, but there has to be kind of a get out point where you think this is just maybe not recovering the way we want it to. The good part though is that when we do this with a long expiration date with these long leap options, right? When we're down here and we have a crazy expiration date of 350 days away, you give yourself lots and lots of time, and there's not a lot of theta decay in that scenario where you can do this and just give yourself time to wait and put the trade on for the long term. So once this goes through, again, we're just waiting on this. It keeps updating. I might have to go mark it to get it in here just to see. 207. Okay, we're in 207. That's fine. And hopefully next time we come in here, this call option right here and this call option right here will be combined into another diagonal trade for us. If they're not, you just have to manage them separately, but understanding what they're both a part of. And we have 206. Let's put that in the hopper then to update it. So we're going to be just around that $200 level, which is almost a 1% return given the strike price that we went to. Our strike price is 211 right there. So our strike price there is 210. And the stock price is 188.28. So we got 30 days again to hopefully get this back in and see if we can get in there with another 211 in profit. We will see if that becomes realized or not. But if it does, then we're going to bank that and kind of lower our overall performance on this position. But that's how you kind of can go in and manage a covered call, the poor man's covered call, when you're interactive brokers and you're kind of going through month by month, seeing how it's going to operate, how it's going to change. You can close off that short leg, reopen it, kind of recycle your capital and increase the probability of profit on your overall position. Obviously, it needs Tesla stock to go up to make this long-term profitable. That's the strategy you want to have. So if Tesla stock continues to kind of dump and kind of dive down, there may be more monitoring to go, but I'm going to continue to update this trade for you to show you how I would play it in terms of how I trade this trade long-term in this paper trading account. Hope you got some value of this one today. Keep checking back in for more interactive brokers, trading, technology, and tips just like this, and I will catch you on the next one.